Well, that's not going to make you very much. Now, if the index does 10% that year, you're only getting 5%. What happened to the illustration that this guy was showing you? Hey, my name's John Stevenson, and today I'm going to talk to you about MassMutual and how they compare, or maybe not compare, to my Dutch oven cooking. So MassMutual, a great company to work with. They're A++, so very few companies get that rating. And they have a fixed index annuity right now that's giving you a 7-year lock on the S&P 500. What does that mean, 7-year lock? Well, a lot of people reach out to me and they're like,
John, I want a fixed index annuity that's going to protect me from the market, but I also want a lot of growth. And I have this other advisor that's showing me an annuity that's giving me 350% participation rate, which if the market does 10%, I'm going to get 35%. That's really good.
And of course, they're illustrating that over 10 or 20 years, which is a problem. And so I will show them, all right, yes, that's absolutely possible, but guess what? They're going to change those participation rates every single year, kind of like my Dutch oven cooking. I took some young men out the other day and we went camping over at some hot springs. And I usually will fix Dutch oven for them. I usually will, I'll put potatoes and steak and you got carrots, you got mushrooms, all the little spices. And a lot of times I put different spices in there at different amounts and it never quite tastes the same. I mean, it still tastes pretty good, I must say. But it's not always the same every single time we go. And it's the same with my Philly cheesesteak sandwiches. Those steak strips and those vegetables, and I'll saute and I'll put that together into a really, really nice, juicy sandwich. But it's not quite the same every time. It's still really good. In fact, in my opinion, my humble opinion, it actually gets better every time we go. But here's the thing. Even though that will change, sometimes it could get worse. Who knows? Maybe I'll have some spoiled meat one time, right? But with MassMutual, they're saying, hey, we're going to give you a 10% lock on the S&P 500, which means we're going to lock that cap at 10%. So if the S&P goes up, if it makes 10% or less, we're going to give you the whole thing. And we're going to do it for 7 years, which means we're not going to change the cap or the participation rate on you for those 7 years. That's really, really good. Because most of the fixed index annuities out there that you see, they're giving you these high caps. Maybe it's 14%, okay? Maybe the participation rate is 500%. The problem is they will reset these. And sometimes they're just teasers. You might get 14% in the first year, but that's only if it actually makes that. And the same thing with the participation rate. What if you get 500% participation rate, but what if the index does nothing? Well, that's 500% of nothing. Okay, and then what if the next year they decide to reset that par rate to 50%? Ooh, well, that's not going to make you very much. Now, if the index does 10% that year, you're only getting 5%. What happened to the illustration that this guy was showing you? Well, guess what? It doesn't mean anything because he's showing you how he's basically assuming that these participation rates or these caps are going to stay the same every single year, and they don't. Now, with MassMutual, with this particular index right now, it is staying the same. In fact, they have pretty good customer service compared to other companies. And a lot of the companies have good customer service, but unfortunately we hear a lot of bad reviews and we read them online, but it's usually because people have a bad experience everywhere and they'll always write about it. But it doesn't necessarily mean the company is bad. But if you compare reviews and you look at Comdex scores, then you'll notice MassMutual is right up there on the top. If you're looking for safety, okay, if you're looking for a guaranteed cap that will not go down, it is guaranteed to stay at that 10% no matter what, I would highly suggest that you take a look at MassMutual right now. I have a lot of people interested in MassMutual because of that lock-in period. Okay, and there are other annuities that will give you a lock-in periods, but not as long, or maybe as long, but the caps are lower, or maybe the cap is higher, but it's not the S&P index. Okay, so there's a lot of things to think about. So don't be fooled by someone coming in and urging you to take advantage of this hot new fixed index annuity that's giving you a huge participation rate or a huge cap while knowing that it's going to reset in a year or two and it's going to change drastically and it's going to change the entire illustration. You want to make sure that what you see is what you get. And in my opinion, if you can get something that has a lock-in period for that type of growth, definitely check out MassMutual. All right, that's all I have to say about that, but I wanted to say it with the strongest sense of urgency. If you are looking for something that has decent growth, you want market protection, maybe you want to be part of the market, but you don't want to have any part of any crash. Okay, we'll take a look at what MassMutual is offering right now, because they change it all the time. They might lower it at some point. I wouldn't be surprised if they do, because sometimes options get very, very expensive. And when call options become expensive, they usually lower the cap rates and lower the participation rates. All right, I hope that helps. I really just wanted to create this video to talk about that, because I think it's something that needs to be talked about. A lot of people are looking at a lot of different fixed index annuities, and it really depends on what you are looking for. If you're looking for growth, there's certain annuities that are best for that, like MassMutual. Now, if you're looking for income, high income, MassMutual is not the best for that. Okay, there's other annuities that are much, much better, especially if you defer it for like 15 years. American Equity, they're the best for that. If you're looking for something between 5 to 10 years, then maybe North American, maybe Midland. Equitrust is really good right now. So is Nassau. So it just depends on what your goals are, and we can look at everything, okay? I hold nothing back. I'm very transparent. I don't care what the commissions are, okay? I'd rather show you the one that is paying you the most and paying me the least versus showing you the annuity that pays you so-so, but pays me way up here. That is a breach of a fiduciary responsibility, and that's not something any advisor should do, but it's done, unfortunately, a lot. Hope you have a wonderful day. Hope you enjoyed the video, and we'll see you next time. So annuities can be hard to understand. If you've got a question or there's something I haven't covered and you're just curious, please go into the comments section and share whatever question, whatever comment that you have. I'd love to hear from you, and I'd love to answer whatever questions that you might have.